Massive profits from a booming market brings Seshasayee paper and boards into news. A small cap company with plants at Erode and Tirunelveli, in existence for over 6 decades, among the top 4 paper manufacturers with substantial capacity. Company's major sales coming from southern India, also exports about 16% to US and Middle East. Major part of product mix is packaging paper. Writing paper is 35%, newsprint a small portion. Capacity utilization 100% in Erode and about 90% in Tirunelveli. Wood, waste paper and agricultural residue major part of inputs, largely sourced from farm plantations. The listed Ponni Sugars supplies bagasse. In FY21, company implemented a mill development plan increasing paper and pulp capacity. It has set out now with a plan outlay of 700 crores for a phased capacity expansion in both paper and pulp. Seshasayee acquired Sarvalakshmi Paper Limited, a company based out of Tirunelveli, for Rs 105 crores. It was under liquidation and not in operation for over 6 years. Planned addition to capacity is 75,000 TPA. In FY23, the company experienced a pickup in demand both in printing and writing grade papers. FY23 showed substantial growth in revenue every quarter. Q1 registered almost a 100% increase. Q2 was around 58%. Q3 grew almost to 2/3. And Q4 on a bigger base showed a growth of 22% almost. EBITDA also registered upward movement, moving from a low of 17.5 to 27.7 Q4. Both revenue and EBITDA substantial pickup. Using the per ton approach, the cost per ton during the last 4 quarters was almost uniform, but there was substantial jump in EBITDA per ton, resulted in realization per ton. And in terms of sales quantity, there was not much variation between quarters, but cost per ton in Q1 went up by 10,000, but it was matched by a sales increase of 17,000 per ton. Q2 it was 11,000 cost versus 27,000 price increase. Q3 was the worst, 8,750 cost increase, but price increase was 31,000 per ton. And Q4 was 11,000 cost increase, but price increase was 25,000. The company was accused of price fixing with cartelization. This is a non-recurring windfall gain which might not be available for any future period. Seshasayee has had sizable operating cash flow every year, kept its working capital under control, continued with its capital allocation program averaging 100 crores per annum last 3 years. Reason for success is strong operational surplus, making available the requisite funds year after year, consistent fixed assets program, free cash flow, the secret of success. Companies pay out quite decent, but yield is impressive as price is low. Return on capital employed reaches lifetime high on the strength of higher profits. Company's fixed assets have been consistently growing along with current assets, forming total assets of the company. Interestingly, net worth of the company has been rising phenomenally. 2019, it was 62% of total assets, rose to 75% in 2021, and in the latest financial year, it has reached a peak of 79%, reflecting the strong flowback the company has ensured across the years. Shareholding pattern with promoters holding 40% plus and growth in holding of FPI. The 5-year CAGR in respect of revenue has been quite impressive at 13.3%. With abnormal profits during the last 1 year, the CAGR for profits is at a peak of 26.3%. But surprisingly, the optimism is not reflected in market cap, which has marginally moved with a 5-year CAGR of just 6.6%. The primary reason being it is a cyclical industry with frequent ups and downs, and the market is quite indifferent to the reported profits. The growing demand has support from a booming e-commerce business and ban on single-use plastic, but concerns are there on the foreign exchange risk in terms of import of pulp and coal. China supplies is a threat and import tariffs are a matter of concern. In the paper industry, bull phase is quite evident after 2021. JK Paper and West Coast have recorded good growth, followed by Andhra Paper. Seshasayee comes only next, followed by Tamil Nadu Newsprint. Seshasayee has been a poor fourth among its peers. On a 12-month basis, 52-week low 160 in June, 52-week high 348 in October, current market price 270, yielding a Fibonacci retracement level of 60%, and the current price is at a discount of 22.5% to the 52-week high. The daily share movement suggests scope for a cup and handle pattern at a price level of 292. It is likely that if the pattern materializes, we can have an upper level of 344. But the concern is market is not responding positively. The current market price is closer to book value, and in a bull phase, lower PE is a trap as the prices are likely to shrink further when the phase ends. Seshasayee has a strong capacity utilization. Its initiatives for both organic and inorganic growth are quite evident. PLOUGH has helped the company to go for consistent capital allocation, but the cyclical nature of industry is quite risky, and China paper and import of inputs and coal are a concern. Hope you found this presentation on Seshasayee paper and boards interesting and useful. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. You can access similar videos at our info card at Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may you please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.